struggling with prop firms? Let's go.
Hey guys, welcome to the channel. Today we're going to be speaking about the bias for the day. It is a Monday, beginning of the week, fresh new start, fresh new opportunities. And I always get this question asked a lot, how do I know the daily bias, or how do I know, the 4-hour bias, or what I'm trying to do for the day. So as you can see, and it's very simple, right? Very, very simple. People just make it complicated for I don't know what reason. But if I was to even just get this tool, see over here, high highs, high lows, high highs, high lows, right? So obviously should be all buys. On the way down here, right, what happens over here? Price stops making new highs, then it comes down here, right? So lower high, new low. Now obviously, this is where people go wrong as well. They don't really identify, they're not really able to identify correct lower highs and high highs, or whatever you want to call it, right? Market structure. And if we go bearish, if we are bearish, then you want to focus more on sells. They're going to naturally outweigh the buying opportunities, just like vice versa. In the bullish market, the buy opportunities are going to outweigh the selling opportunities. Now there are selling opportunities over here, like here, this bearish candle breakout. I'm sure I can find a sell in there, but why this still will be a low probability sell. Now from the years of trading, I've also come to realize, you can even have multiple high probability setups, but you can still lose them trades. But what you want to do is, for example, if you want to take 10 trades, 100 trades, 1000 trades, you still want to make sure they are all high probability setups. Then your win rate, then you can work out what is actually your win rate after you've taken those super high probability setups. Now, coming back to the point, so I will also throw in a certain tool if I can find it. Look at this. So it just makes more sense to the viewers. Look at this, new high. Look at this. Now, why is this one interesting? Look at this. Obviously, this is a higher low, but with this higher low failed to break this higher low, so it means we are still going further up. Now, new high, right? Higher low, new high, and then what happens? For the first time, this higher low is broken. And then when price comes back up, what happens? It fails to make a new high, fails to break this, and then we have a shift towards the downside. So this higher low over here broke this higher low, right? And sorry, this low broke this higher low, and then this lower high failed to break this new high. Now we are on a push. Well, I can mark it like this. Now what's happening over here? Look at this. It's broken. Now obviously this push, this high over here, this is where another confusion can begin. Do I just take an entry straight away from here? Well, you want to wait. You want to wait for if it's actually a bullish push bar to begin, it would create a higher low. But it doesn't. It creates a new low, right? So these kind of things you want to factor in. I'll just stop it here. Obviously I should have just you can even mark it this one, then I would have marked it, right? But I just want to keep it nice and simple for now. So in a bullish market, you want to focus on buys. In a bearish market, you want to focus on sells. It's like wearing ankle weights when you go for a jog, right? Let me just bring that back. If I take sells in this area, it's like I've got ankle weights on while I'm jogging. It's like gravity has increased. It's going to be so much harder for me to run. If I focus on buys, those ankle weights come off. Try this, or if you've already tried this, you'll know exactly what I'm talking about. If you run about maybe 1 mile, half a mile with ankle weights on, if you can run that far, 2 miles, whatever you call it, the moment you take them off, you're going to feel a lot lighter than you usually are as well when you don't have any ankle weights on, right? And when you put them back on, it is basically when you find the trend, you got ankle weights on, you're swimming in the direction of the your opposite direction of the river, and that's what it basically is. But when when you're trading with the trend, you're swimming in the direction of the tsunami, of the big players, whatever you want to call it, and it's that much easier. Now this trade over here, even though it's a winning trade, in my eyes, it would still be classed as a bad trade. there was not a real indication that it was about to be a bullish, but I've still marked it anyway. So I'll just call this red, so it just stands out. I can, if you have a sell opportunity over here, I'll would have marked that red. So let's go into smaller time frames, and what I'll do is, by the way, the link will be in the video description if anyone is interested from the unlimited one-to-one elite mentorship community, one-to-one mentorship from myself. You know, if you check it out here, winning trades, losing trades, everything gets posted. Up to 1600 members, students just posting their winning trades, you know. And also you got the elite course as well, for those who can't afford the mentorship. I made this for you guys as well. All the links will be in the video description. Don't want to double on too much about this. Now I want to double a little into, I'm using the word double a long time. Okay, I want to go into a little bit more of entries now, because I think people, you know, when they draw their zones, or they're able to draw whatever, their markups, their structures, they always get it wrong with entries, right? And this is something I want to focus on. So you can use the small time frames, 1 minute, 2 minute, 5 minute, 10 minute, 15 minute, whichever one you prefer. Obviously the bigger time frames will give you more precision, more you know, to filter out the noise, the bigger time frame. So we've got obviously this candlestick pattern over here. Market comes for the first time into our zone, which obviously you can see I've highlighted in white. Price comes down, right? And then we've got bearish candle, bearish candle, bearish candle, and then we get our first bullish candle, top of the zone. Same over here as well. Now if you can see over here, then we have this variation pattern, or a bullish engulfing over here, and same over here. So this would give you a nice entry. Now I can refine this, and which would give it an even much better entry, as I can, let me just get this, where's it gone, this is okay. So as you can see over here, you can see these wicks rejections over here, and you can see this you know, a little bit of a support level created with the rejections. So I could have the below here, or below the wicks, as you can see from these wicks over here. And then if I was to obviously, but then again, obviously with Euro GBP, it does have a little bit of, especially with prop firms, a little bit of a bigger spread. And then obviously the commissions, I mean, this is what, 1.4 pip stop loss. With prop firms, they'll actually crush you. So let's just have it below the area that originally we said, 3 pip stop loss, which is still, I mean, for you, EJ. And I'm trading and mentioning a pair that is actually very, you know, not that much of user friendly, but still a nice 1 to 5 is very realistic. Now if I go to a 5 minute time frame, so that's, so engulfing patterns, very, very powerful. Let's break into some of these now. So the first time price comes into our zone, nothing obviously great over here. Let's mark it where it actually starts from. Price comes down, we've got starting to see, right, look at this, a left shoulder, the head, and the right shoulder where the price just falls off. So you could have even entered from this area. Let me just clean this up a little so you can see better. Okay, so what happens now, even if you look at it from a market structure standpoint, right, market structure happens everywhere, guys. Look at this, little mini high highs, higher lows, higher highs, higher lows, new high. But then what happens over here? No new high is created, which could only mean one thing: price is on its way down, right? Now let's just keep marking this, right? And it's not clean, I've missed that area. So price is supposed to create, look, so we got a new high which breaks this area over here, new high, but then obviously a higher low again, but then this over here, this fails to break this high, so we get a new lower high. And then obviously you can just pretty much take your entry from this side. I'm just giving an example, right? Even if you just take it into market, you can even focus on market structure, guys, even on your entries, even on the small time frames, which people fail to do. But if I was just to look at candlestick patterns alone, obviously look at this dark cloud cover, another dark cloud cover here, multiple long wick rejections, a very, very weak bullish candle. If I was to turn on the candle strength indicator, which obviously I don't have right now, this would be just a very, very weak bullish candle. So let me see if let's do one more. Let's just do one more. Now sometimes you might take an entry, guys, and you might get a wick rejection. I mean and it might, yeah, a wick out, and it'll just take you out. It's normal. Doesn't mean your strategy is flawed. People have losing weeks. People have losing months. It's just the nature of the game, right? One losing trade does not define your strategy or define your edge or define your end of year P&L. It's part of the game. You can have your stops above this higher low. Sorry, lower high. No, I was going sorry, higher lower high, I mean, sorry. Just got confused there for a second. Okay, so price above this, and then obviously you survive this, but let's just say even if you didn't, right, it's totally fine. It is totally fine, guys. I don't know why we give so much emphasis to, oh my god, win rate, it has to be so much. Win rate is great, but at the end of the day, it doesn't really matter. Risk management is more important, your edges are more important, risk to reward and all these kind of things, you know, how you're able to cover your losses and manage your emotions. These kind of things are way more important. Anyways, so if I was to go in small time frame, now markets, remember, are more choppier. We're entering almost near Christmas time, New Year, so markets are going to become more choppy, less volume, but still bearish engulfing over here. So obviously we've got a nice breakout, strong breakout, bearish engulfing over here, and could have even had, you know, entry from here, stops above this, just about survived, and, you know, winning trade. So I just want to keep it nice and simple. I just wanted to focus on structure with this, and even if I was just to go randomly back, right, just grab a random part of a chart. Price moves in waves, right? Remember that, guys. So look at this, sorry, new high, higher low, fails to break, right? Fails to break this high. Price creates a new low now, right? Price creates a new low, comes back up. So see, if you start looking at selling opportunities, you wouldn't be wrong. But in this case over here, me personally, I would sit on my hands and wait. Why? Because price is not making new highs, but at the same time, price is not making new lows. We are bullish over here, but we are bearish over here, right? You want to just sit and wait. Some people call this a bullish flag pattern, and what I mean by that is, let me just mark this up, where price is bullish, right? And but then what happens is we get like a flag pattern over here, like this, and what tends to happen is price just blasts out and just continues going bullish, right? A better example would be this one over here, new high, higher low, new high, higher low, and then you start focusing on buys, and then that's why the market just, you know, kind of pushing further up. There are many indicators you can even use to find market structure, but obviously when you practice yourself, learn the game. But yeah, simple, very nice and simple. And let me just, I don't know why I deleted that, let me just bring that back. But the whole point is, you know, focus on your market structure. It will save you so much money. It will up your game, trading game, trust me when I say that. And you'll be able to break down you know, your strategy, your edge, and the breakdown charts. And now still, you get everything perfect, you can still lose a trade. I want to highlight that, right? You can do everything perfect and still lose a trade. It's the nature of the game that we're in, like I mentioned before. Okay, I just want to call this now. Make sure you hit that like and subscribe, share, comment. And if you are looking for, again, unlimited one-to-one sessions from myself in the elite community, join the Discord. All the links will be in the video description. Message me one-to-one. I don't work with everyone, but yeah, take care. I'm out.